Let's look at Ampco-Pittsburgh. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we go to the Megatrends, and I have a separate theme called micro themes. So these are the ones where there were not enough companies within the micro theme to create a separate theme. So I do have this one, Ampco-Pittsburgh, and they are in the machinery business. So 127% from the low, minus 30-ish% pullback. So if we go here to the company's website, then here you can see that they do have various products. So yeah, some nice images. If you go here to business, you got Union Electric Steel, you got Aerofin, Buffalo Air Handling, Buffalo Pumps. So yeah, let's look at the charts. So this is the big picture. And what I found very interesting is that there were these very major time cycles that have been relevant for a very long time. So we go all the way back here to the early 90s, and throughout there's a reasonably good match here between time cycle and the price. The interesting thing about the current time cycle is that it behaves different from the previous ones. I think one of the key reasons is that price, it's fallen substantially from the highs way back here. And when we do see that price is very, very depressed, that is when you can see that the time cycle just starts to behave differently. It can especially be interesting during the declining phase of the time cycle, in that the decline might not be as deep as it usually is, because price is already at a very, very, very low level. And the pattern we are seeing developing here is a very classical technical pattern called the cup and handle. So we have this rounding formation, and we could be in the process now of forming a cup and handle. So this would then be the handle, and this is a long-term, very bullish technical pattern. So we are trying to fight here this red 200-week moving average. We will eventually get above it, most likely, because it is pointing sharply downwards. So we will have a golden cross on the horizon. It is sort of like a forced golden cross, in the sense that it is that moving average is pointing sharply downwards. The 50-week moving average in green is pointing upwards. So it's just sort of like physics that we get across, but still a lot of technical analysts will simply get across. They might not reflect too much on the reason why it happened. Looking at the RSI, we have pulled back to a level that has triggered rallies ever since this capitulation low here. So that's bullish. Going here to the daily data points, then we do have a very interesting moving average signal. So the red 200-day moving average has gone from being resistance to turning into support. So that is bullish. I would lean technically bullish as long as the 200-day is able to offer support. Here and here you see that we bounce and then we rally strong. Here we bounce, rally strong. What is a bit problematic here for the bulls is that we keep testing. Test, 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 and test. So there is, it's a bit spooky that the bulls are not able to get that momentum going. I would still lean bullish, but it is very contingent on that moving average holding. You do not want to lose it. RSI is at a low level, so there's not really any excuse now for the bulls not to rally. So if we go here and look at the seasonality, the bulls have even less excuse here, because July, seasonally, it is one of the strongest months. August, September, October, you do see that there is a general strengthening from June towards October, which should be reason for the bulls to add some positions. Here is a horizontal trend line, so we have that on top of moving average support, and we have broken out above this diagonal resistance. There is no resistance above us as well, horizontal resistance. but the bulls should be able to rally here. Okay, looking here at the short float, nothing special. When we go here to SACs, they do not have much in the way of ratings. That's because this is a small company, $115 million in market cap. There's no dividend. Beta is not that big. It is a low-priced stock, $6. So yeah, it is definitively, a very, very interesting case at this point, because we do have some very clear support resistance levels. The seasonality is also, favorable of a more bullish take. The time cycles were a bit... the problem with the time cycle is that we are still part of a major declining phase. Then again, we are at a very, very low level price-wise. Because here, you can see here that, here when you have a declining phase, it is very tremendous. But when we are at this very low price, and we also have this key reversal pattern with a cup and handle developing, and something like support here from a key moving average it's a nice level for the bottom of a handle to develop. So yeah, I think that as long as this moving average holds, I would lean speculatively bullish here. Let's look at some correlations. So this is Ampco-Pittsburgh compared against the S&P 500 long term. So we only have a 49% positive correlation. That is not that strong. If you look at it short term, only 36. Also, that's not strong. So there's not much relationship there. When we look here at the dollar index, we do actually have a minus 70% relationship long term. So they do sort of move opposite each other. Shorter term, there is only minus 12-ish%. So yeah, very mild correlation. Looking at the corporate bond ETF LQD, there's virtually no correlation at all long term, and short term we do have a minus 60% correlation, but you see that this is towards the historically very low end of that correlation. So if we go down to the last one, and that is the XLI, and that is the industrials ETF. So we do have a 58% positive correlation long term, and shorter term it's only 24%. So basically, the strongest correlation we do have here, certainly here looking at the long-term picture, that is the with the US dollar index, when there is a rather strong negative correlation. So they do sort of move a bit opposite each other. Something that is very tantalizing about these very depressed stocks is that it ties into this whole buy low sell high mentality, is that when you go from a very low level, historically, if we were only to go up here, that is 203%, which is still very far away from the high. Up here, 425%, and if we were hypothetically, like super hypothetically, to make a new all-time high, so let's actually measure from here to here, 776%. So obviously, just because a stock is down from the highs, there's no law that it has to go back up there. There are obviously reasons why this stock is down so much. Obviously, looking here at the website, it is very primitive. So they definitively, and they don't even have HTTPS security on their website. So if I were to guesstimate, it might very well be that maybe their marketing is not really up to date. So that's why they have been losing some business to their competitors. But that's something that can also be fixed. Given the current level of marketing here for their website, it doesn't take much to improve the situation. I mean, it would be very inexpensive for them to fix this. So. And maybe quite inexpensive to fix other things as well. Do they have any? I don't see any social media presence. So, yeah, interesting. Yeah,